Right, there's a bit of worry about the US earnings and, of course, where we headed. We did have those disappointing numbers that came through from Citigroup. On the other end, we didn't have very bad numbers from Goldman Sachs, but the markets didn't seem to follow through on the fact that they were better than expected. JP Morgan Chase the previous day fared quite well, and markets are now above that key 10,000 level. Do you think the financial sector could perhaps prompt a sell-off?
Yes, the Goldman numbers were very good. They were about 20% above expectations, but the market, I don't know what exactly they were expecting. But as soon as the numbers came out, the stock just fell. I think people have built in such expectations into these financial stocks, especially since competition has been reduced, and they believe that, Goldman Sachs has a mystique at the moment that it's the best on Wall Street, and every time it comes out, they don't just expect it to beat expectations, they expect it to beat expectations by quite a large margin. And that is one of the things that I think over expectations or over optimism on the expectation side have hurt the stock in recent times. But I mean, if you look at where it is right now, it's at 188, I think last time I saw it, which is quite a high number. And if you look at where basically Citi is as well right now, it's 4 times its low for the year. So it's not a bad recovery.
Over 10,000 for the Dow. I think there's a lot of concern coming to the fore. Many say, are we going to see these levels being sustained? Has too much been priced in? What are your concerns?
I think the Dow is probably going to, the rally is probably going to hold on for a while, at least until we start seeing interest rates rising. And when we do see that, then we can have a bit of a slaughter in the market, because what's been feeling what the current market rally throughout the globe is the fact that money is so cheap. And so if you have cheap money and it costs you nothing to get it, why not just get into stocks with it? Because it basically is going to give you a good return. When the cost of money starts to go up and you have liquidity being squeezed a little bit, you might just find that these markets aren't as strong as we thought they were.
We also had quite a lot of data out of the US yesterday. We had those unemployment numbers that came through, weekless jobless claims actually, and we also had the manufacturing numbers that came through. On the disappointing front, housing numbers came out, foreclosures rising more than 5%. When you see weakness still prevailing in the housing market, does this not also create a risk?
Oh yes, the US economy is nowhere near as strong as we would hope it would to be. And the most global economies, except for the Asian economies, are still quite weak. And a lot of the stuff that we're seeing right now is being fueled by government stimulus, is being fueled by cheap money, etc. And once we have those things removed, and we have to be removed, you see Australia increasing interest rates recently. Probably not going to expect the interest rates to increase in the rest of the developed world until next year, at least the second half of next year. But when these things start happening, when you do start seeing the government artificial stimulus being taken out of the economy, when we start seeing the incredibly low interest rates and therefore the massive amounts of liquidity being reduced to a certain extent, we will find that the markets are going to suffer. If you look at the cash for clunkers deal, look what happened to the automobile market. As soon as that stimulus was taken out, it crashed quite dramatically.
So looking at the oil market, we had oil breaching $78 a barrel. Quite interesting to note, considering that there's just a lot of optimism that's come to the fore. What do you think this is driven by at this stage? Do you think that it's on speculation that demand is going to recover to good levels?
Yes, I do think oil has been trading out of a range recently. It's like mid-70s to mid-60s and so on. I'd be more surprised if it starts breaking the $75 to $80 range and going above. And then you'd see maybe there's a bit of a movement to the market. What is surprising is, what isn't surprising is the fact that the dollar is weakening against global currencies. People are finally getting to the idea that maybe there is a problem with the dollar, is a problem with the US's balance sheet. And that's partly what's driving these massive commodity prices, gold higher, platinum higher, not just due to the fact that there's more demand, but also the fact that it's a great way to get out of the dollar.
Many traders are saying, NYMEX traders in fact, are saying that oil will hit triple digits relatively soon. Do you agree with that?
May hit it, but I don't think it'll stay above it unless the dollar really collapses. Unless if the dollar stays reasonably stable, if you don't have a very major collapse in the dollar, I don't see how demand for oil is going to go up that much. I know China is out there, I know India is out there. They do demand quite a bit of commodities, but still the major demander and consumer in the world is the US, is Europe. If you took the amount of commodities they demand, the amount of resources they demand, they far outweigh the Asian markets. And therefore, if you look at, for instance, oil, if the US and Europe are still weak, the demand for oil will still be weak.
When you said the dollar, we could see a blowout there. The dollar is at a 14-month low against a basket of major currencies. Do you expect the dollar to remain in this weak level?
Yes, if you look at, for instance, commodity prices, yes, gold is hitting unbelievable levels against the dollar, but against all other currencies, not so much. It isn't at the highs it was earlier against the rand or versus the euro, etc. So the dollar is weakening. In terms of what could strengthen the dollar, maybe a global situation like some kind of terrorist attack or who knows, an invasion of Iran or something. Whenever we have these kind of uncertainties in the world, we always find people going to the safest currency in the world, which they believe to be the dollar. Whether we'll have a blowout on the other side, whether we have a case where the dollar will fall dramatically, it is possible. It isn't likely, but it is possible.
The rand at 7.27 at this stage, and of course it is a function of a weaker dollar, and the technical analysts say now the next level is 7.18, and we could even see it hit 6.50 at some stage. Are you concerned about the rand's strength, and do you think that it's going to stay at these levels until the end of the year? Because we have some bearish comments out there saying that we could see the rand weaken to 9.50 to 10 rand to the dollar by the end of the year.
I think at 6.50 we could have real trouble in terms of our exporters. We'll have real trouble in terms of imports because they'll become so cheap. They might just have a problem there. If we have to look at the ideal range for the rand, it's going to be above 8 rands to the dollar. I would think it will be even balance for the importers and for the exporters. Whether or not we'll see such weakening of the rand, I don't know. Right now, the IJ is that there is going to be no more rate cuts. But some of the retail numbers that came out earlier this week were dramatically lower than we expected, and that might just be the thing that pushes for one more rate cut. However, I don't believe that's going to happen. I think we have to have no more rate cuts, and if that's going to be the case, if the dollar basically continues in this current trend, I don't see any reason why we're going to be hitting above 9.50, etc.
It's quite interesting you said we could see another rate cut. I mean, we've also got to take into consideration Eskom increased tariffs by 45% as well, and that obviously will counteract all the bad news that we see coming through on the retail front, because it's going to have quite a big impact on inflation going forward.
Oh, yes. That is obviously the elephant in the room at the moment. The Eskom's, I think it's 45% per year for 3 years, and then they'll see if they'll reduce it from 45% to something lower. It is quite a dramatic increase, and it is going to have a huge impact on this market. It's going to, of course, impact a lot of our commodity producers. I know a lot of them, for instance, the iron ore smelters, etc. out there. Those guys are going to be in real trouble if they can't absorb these price increases. We also have a situation where we have inflation, like you said, is going to higher. Now the problem is that yes, we are going to have this inflation coming through from the electricity price, etc. But if we are seeing retailers suffering to such an extent, we expected like a 3% plus drop. We got a 7% plus drop in retail sales. That is obviously quite a big impact on the market. It shows that the South African consumer is not demanding what he was before. And I don't know, it is going to be a tough decision. I do believe it's not going to be another cut, but there is some reasoning for another cut.